I'm going to share first of all right, this is actually old news. So this is based, I know the date says the 30th to 10th, but I don't think it is. I think it's the end of September. I think when you open this as a spreadsheet, the date updates. So that's what's been going on with that. So we can see where we are in this world. Make sure I've got the right one. That's always a good idea. Fortune. So we've actually put into this $144,000. The account value is 129,000, which sounds bad, with 14,000, nearly 15,000 down. But if you take into account the drag, we're 55% up after 7 months. I'm very pleased with that. And in fact, I suspect, in fact, I know that the situation has actually improved anyway since this was done. I put some little highlights on some stocks here. There's stocks that were at prices that were below the price that we bought them at, that I have taken off the table with some clever skullduggery and trickery. But the main reason I wanted to show you this is to show you the new tab that I've put on it. I've put people in as initials, because when I've used a code system previously, no one knows who the hell they are or what number they are. So where people have got the same initials, I've used the second letter of their name. So when you get this by email tomorrow, you'll be able to find out where you are. So first of all, the amount of money that's gone in, and that is split into two. So we actually started trading at the beginning of April, but some money went in before that when we were sort of gathering people together. So that goes in there and gets into the value of the person's account 100%. Then we've got money that's gone in after the 1st of April, and that could be any time after the 1st of April up to the end of September. So it doesn't include any money that's gone in October. So that counts towards units, but proportionate. So if it's been in since the 1st or 2nd of April, then it will carry a lot more weight than if it went in on the 30th of September. So we weight it with that. So we'll have percentage of the money that's gone in and percentage of the units that are owned. So they are slightly different because of the timing of the money that's gone in. And a total amount invested, then converted to dollars. Then if we go to the bottom of the list of people, we've got the 129,000. That comes from that front page of this dashboard. So that's how much the account is worth. I've just split it between people depending on the percentage of the points that they've got. The net gain, which as we know is minus 14 on there. So that's what it costs us as individuals. That's the percentage. Yes, it's the same for everyone, except people that haven't got any money and they haven't lost anything. And then we've got the drag from the options sold. And then we've got the gain that takes into account the drag and then the account value with that. And then we've got where it is with no drag involved, 55% up. So that will go out tomorrow. It needs checking. First of all, you need to check that you've got the same money in that I think you've got in. And I can immediately see an error there. They should be pounds. You haven't been putting dollars in, you've been putting pounds in. There we go, that's sorted out. So yeah, so when you get it, check the amount first of all, that's the main thing, and come back to me if it doesn't look so good. Okay. That's a lot to take in, but are there any initial questions? By all means, ask tomorrow when you get a proper look at it. And if we just go back to the front page, this was done by somebody in the Philippines, and there's quite a lot of it missing. when it comes out in October, it will show you of the $79,000-$80,000 that is in the reservoir as put income. It will show you when it's due to come into the account, into the value of the account. And then you got some nice graphs there. So there'll be a lot more information on it, but for the moment, it's sort of a draft. Okay. Everyone happy? So that it'll come out monthly, but that doesn't mean to say that it's not the quarterly profit distribution, but it'll come out monthly to give you an idea of progress. Right. Let's see what's happening in the real world, or my world anyway. So the cash was 144,000 and it's now 201,000. And the net liquid value is also up. I can't remember what that was. It was 144, I think. So that's gone up as well. And we have got some stock buying power, so we could actually do some trades. But the first thing I want to look at is where we stand with any trades that are due to expire this weekend. I'm admitting people here. So they're the ones that have October in them. And there's one, but that is a call. So we have given the opportunity for someone to buy the shares off us, BlackBerry, for $10. And we got 71 cents for that. But we actually bought the shares for $8.87. So we're well in profit. Current price of BlackBerry is $9.82. So we're pretty close, which is good. So my hope is it stays below 10. We just keep our 71 cents per share. And next week, we'll sell them the right to buy them off us again at $10. So that will just, or perhaps 11, we'll see how things look. So that one doesn't need any attention.
So Jeff, can I ask a quick question?
You can. Just
a quick question. Is that like a lid? Like we had the lid?
Oh, no. You see, this club's had the in some ways fortunate, in some ways unfortunate experience of starting off with more than 25,000.
Yeah.
So we basically went straight into
puts and
selling
calls.
puts.
Okay.
This is something that you do when you own a share.
Yes.
And in fact, these shares, I don't think they were put to us. I think well, some might have been. So we actually own these shares. We've paid $8.87 for them. They're standing at sort of $9 odd now. But instead of selling the share, we've sold someone the right to take the share off us at $10. So instead of selling it for $9.85, it could be taken off as a 10, but we've also got another 71 cents on it. If I go to the orders and put in BlackBerry, yeah, that was like magic. You can see that this is not the first time we've done this.
No.
We've actually had 7 calls that we've sold on BlackBerry, going back to March, May, June, July, August, September, October, and we hope to sell another one for November next week. And in each case, we've had, well, we got the shares, they were 10.28 originally. We've had 76, then we bought them back again for $9. Then we sold a call and got another $45. Then we bought them back for $8.59. And since then, we've had 60 cents, 96 cents, 60 cents, 60 cents, and 71 cents. We're doing very well with BlackBerry.
Mm.
Yeah.
Thank you.
So, yeah, that's why Owen calls me the sort of king of the calls. Right. Next one is CCL, Carnival Cruise Line. Now, this is an interesting one, so let's have a look. The current price of Carnival Cruise Line is $23.76. And we have sold a put saying, hey, would anyone like to make us buy these at $30? And we got $6.50 for that. Oh, sorry, I've already done that. The October one is 0. So what I've done with that is I've bought it back and then sold another one, $30 again, but for January. Okay, and so the difference there, you've got, we've now got $6.50 for it, whereas the first time we did it, we had $5.40. So we've actually got, we've pushed it forward out of danger and got $1.10 for doing so. That's not bad. That's all right. And Carnival Cruise Line is, 1, forecast to go up quite a lot, and 2, pretty volatile. But if we don't like it again in January, we'll do the same again and just keep taking money off it. Let's have a little look at Carnival Cruise Line on the orders. We've had sort of $5.40, then we got that, then sold it for $6, so we got actually 50 cents extra on top of the $5.40 we already had.
Thanks.
Buy to open October, that needs cancelling. That's the lid order for October. It is cancelled. And there's the new lid order for January. All good on Carnival Cruise Line. Anything else happening in October? I've done them already. Yeah, here's another one. CTRA. This has changed its name. It was COG, a mining company. Someone mute there. I don't know who it is. CTGA, CTRA, here they are. So Coterra Energy, CTRA. So what have we done? We have sold the right for someone to give us these shares at $18. And check that out. Anyway, the share price is currently nearest down at $21. So they won't want to make us buy them for 19 or 18. And our protective put, which did click in, gave us a right to sell them at 17, won't be needed either. So that can't be right, the zeros. We obviously sold it for some money, so I don't know what we got for it, but that we will just take the profit on. And there's any more. Oh, there's good old Edu. So we own 700 EDU shares, probably bought at some ridiculous price. We're about to own some more at $4, which we've had $2 in put income for. And then we've got this one, which is to give us another 100 shares at a horrible $20. Now that one, I've tried to kick it forward, and this, so I'll show you what I'm doing there, sorry. So I'm going to see if we can kick this $20 put on EDU forward. So I click on it, and we'll be buying to close, but would also be then selling a new one. So both the same number of shares. The October one we want to buy back, and they want $17.70 for doing so. So we would have to get more than that to make it worthwhile. I'm going as far forward as I can in time, January 2024. And at that point, they won't even let us have a $20 option. So 23, January 23, no, 17.50, and that'll be no good. So if we did that, we'd be buying it back for 17.70, and we'd only get 14.20 for selling the next one. So that's no good. And go to January of this year. And again, there's no 20, so that's no good. Try one more.
That's January 23.
All right, sorry.
So January. It might be different.
Yeah, you're right. There is, oh, there's January 22, there it is.
The June. That's June 22.
Oh, it is, sorry, yeah, you're right, I can see that.
Yeah.
I've actually been through them, so I'm not expecting it to be there. There's January 22.
Oh, there
Oh,
we
it
are.
goes up to 22.
Yeah.
But let's have a look at what they would give us for it. 17.50. So there's only,
20.
20 cents in it. Could even be worth it, but I probably have a better plan. I'll just put a price in and see what happens when we get the live prices up. And we've got, it's basically the wrong way around. So we'll be buying that back for 17.70 and selling the one for 17.50 on the real prices. So we need a plan B, and it's calculators out time. I'll get mine up. So this will be put to us at $20. So it's minus $20. However, if we sell it again, and it has actually gone up slightly today, EDU, $2.39. So we'd add in $2.39. So I'm saying, get put to us at 20. We sell it straight away for $2.39. Then if we go to the, it should be on here, Edu, we got $4.20 for it. So that's $4.20. So that still leaves us $13.41 underwater.
Yeah.
So let's have a look at the option chain. And we'll only go as far forward as January initially. And if we went to January, even if we sold the, where's the bid? Even if we sold the 17.50, we would get $15.10 for it. So that would actually put us ahead. So what we would have done then is brought the strike price down to $17.50. So we've gained $2.50 on it there. That would also go into the buying power, and we put it into a credit. And that was only going as far as January. In January, if the price, and the price won't be up to $17.50 by then, we can do it again and again and again. Let's have a look what it would in April. That's not for me. In April, they only go up to $4.50, so that's no good. April, June. No. December. So what I'm looking to do is to get more than 13.41 at a lower strike price. And no. So the best deal is actually the nearest one, which is crazy. Let's just have a look at December. If they're going to do that to us, it only goes up to $7.50. So that is the plan for that EDU $20 strike price put. Next week, Monday, when it's put to us, I will be looking to sell it and sell a new put and put us into credit overall on it. Is that a good plan?
Very good plan.
Very good. It's clever, isn't it, this? Right.
So, from my calculation, it looks like we'll be up 169 per share.
Yeah, that's the difference. Yeah, that's fine. Less the costs involved, but we'll be up. Yeah.
Oh yeah.
Yeah, and then we still expect this to go up to $7. Value line expected to go up to $18 over the next 18 months. So we will end up making a lot of money on this stock. It's just going to take us a long time. And in the meantime, we'll just keep reducing the exposure on it. So that's EDU. FLR, we've already pushed it forward. So we've got 0 for October, and we've gone to January. So again, I've pushed it forward, and we've increased it from 510 to 770. And so that's all right. And the costs are less when you do it this way as well. So we just push that forward, give it a chance. The current price of FLR is 1686. So we're not a million miles away from it anyway. Quite happy to keep taking a few bob until it gets there. What have we got next? I think gold has already, I think that's been put to us. I don't know when we obtain gold. I'd have to have a look. Gold. Gold, yeah. So gold, we sold a $23 put. The price of gold at the moment is $19.22. So yeah, it got put to us. So I cancelled the lid. That's what happened there. So it's been put to us at $23 and we got $3.10 for it. So we'll do the same again with this one. In actual fact, we could do it now. So if we go back to portfolio, let's follow this through on the calculator as we go. So we're going to get minus 23. And we've got 300 of them. Okay. And we're going to sell it. Looks like we get $19.23. Let's get the real prices. So $19.25 by 26. So get into the cents. So we've got, starting with minus 23 plus whatever we get for this. And we've got them at $19.23. $19.25, check. There it is. So it's plus $19.25. So with $3.75 down. So we now go to the option chain and look at gold. We don't even have to go that far. We'll have a look at January. So we're looking for a put, that's this side, that gives us $3.75. Preferably, we've got the current price of 19.26, so we want to be above that, and we want some space to put in a lid. So we're probably only we're talking about the $22 strike, the bid for which is $3.25, so that's not quite good enough. So we've got two choices. We can go up to 25, that's $6, but we don't like that because that's going to take longer to get to. Or we can go a little bit further out in time. So let's have a look at March. And for March to get $3.75, we can do it. We might be able to do it on the 22 by negotiation, but we can definitely do it on the 23, and there's more than $1 in it. So, you know, we can do that one. Or when's the next one? June. Holidays. So by the time we get to June, $22, still not there, is it? Oops. Yeah, $3.90. So what do I want to do? Do I want to put it straight into profit at $3.90 by going to June? Or we could have two bites at it, take some profit, take some of our $3.75 for January, and then push it forward again and get the rest. Any takers?
I think do it in two goes.
Two legs.
Money in the bag.
Let's go for January, yes?
Yeah, that's all right, because I will remember. I won't remember, but I will write it down. So we're talking about $3.25.
Do you think that's the right decision, Jeff?
Well, let's. I'm just going to have a look at. Unfortunately, I haven't got my professional charts on here. I've got them on another computer and I'm struggling to switch them over. So
if I think about the reasoning behind why you'd make that decision,
yeah,
I thought that if we got some money in January, then we could use it for something else, and then we'd get the rest of it. We'd sort of be able to do more with it,
well,
rather than it being tied up in it and just staying there until June. But I'm not sure if that's the right sort of background thinking.
well, the stock price is rising. It's actually up 3.22% today to $19.28. It's spent time at $31. There's a major peak at $25. I think I would actually be happy to even sell the 25 for $6. So at that, we would be getting, so $6 minus the $3.75 that we need still leaves us with $2.25. So we can actually go to go to 25, and we're actually 25 cents better off.
Right.
And it's perfectly capable of getting to 25. And if we don't like it in January, we can still kick it forward. So that's what I would actually do.
Right. So you would do it in two bites. I'm
doing it. It's actually in one bite. So
Okay.
I'm saying that we've got three choices.
Yeah.
One is to go to a higher strike price and cover it, which is take the $6. But then we need the stock to get to $25. Or we can still kick it forward if it doesn't do that. Or we can stay at $22, do a January, get $3.25, and then if we then kick it forward again, if it needs kicking forward in January to get the rest of our $3.75.
Yeah.
Or the third choice is go out to June and get $3.90, so it's covered in full from now. They're all acceptable to me. I haven't got a strong preference for any of them.
Okay. Good. It's just good to know your background thinking, how you come to a decision.
Yeah.
Thank you.
I'll go for the more money.
Yes. Yes. So it's, yeah.
That's going to be $6 times 300 into our buying power as well, into our cash.
Yeah.
Does everyone agree? Any dissenters? Anyone want to be a little bit safer?
No,
That's fine.
that's
Right,
good.
so it's three of them. Sell to open, 25 January. It's $6 by 6.15, so quite happy to note it's in 5 cent intervals. And of course, we'll try and get a bit more. We'll try and get 6.10. We probably won't get it. Now we'll look at the live prices, and they are 6 by 6.10. So we definitely won't get our 6.10. We'll come back down to 6.5, split the difference. Verify, so we're checking it. It will give us $1,800, and it will use about just under $3,000 in buying power. But we've got plenty of buying power. And they gave us that. There we go. Okay. So what do we need to do now? We need to
Put a lid on it.
Put a
we
lid on.
need to put a lid on it.
Lid on it. Yeah, lid.
Right. So, and to do that, I go and find it on here, and here it is. So we've now got no gold shares, and we've got 3 of these instead. Click on it, and it gives us this. So we change it to buy to open, same number of contracts, same month. We go 1 strike price down, which is 22. That's a big gap, don't like that. And what do we get? We got 6.10, so we give them 60 cents. So this is a limit order. We don't expect this to go through unless and until the price comes down to 60 cents. And it's currently at $3 odd. Job done. Next is HA. So we've sold a $28 put. The price is $20.73. This is Hawaiian Airways. So this I don't think, and again I have looked at it earlier. I'll have a little look and see if there's anything available for pushing it forward. But I think this is the same strategy as we used on the gold one.
Is it HA or HAE we're looking at?
And we've got both, I believe.
Oh, okay. Well, look, okay. I thought, okay.
Yeah, no, HAE is December.
Okay, yeah.
What we're doing, 20, so start the 20, there we go. That's not very good, is it? 760 to buy it back and only 170 if I sell the next one. Why is that? Have we got the strike price right? No, it's 28. So yeah, it's negative. So we'd have to start going out further than that. So let me just kill one of those. So we know these will get put to us at $28 and we can sell them again for basically $21. So we will be $7.75 out. Straight away, we know if we sell a January put, we'd be $7.50. So it's not going to be very difficult for us to get into positive territory on this. It'd be more difficult doing it through rolling forward the put than it will be of sorting out the share. So that one, I say, let's keep our powder dry and sort out when the share comes. What else have we got? We've got HBI. We've sold the 22. Of course, the market is down a lot. We're not very happy with the market. That's 16.57 at present. And HBI, it's at a nice low. It's ready to turn around. It should easily get back up within a month or two. So that one, I think we put on a watching brief. There's another one hiding at the bottom, PRDO. PRDO, we've sold the 15. It's currently at 10.79. Not there isn't. Only goes as far as April. Sometimes it's even expeditious to actually sell a higher price, strike price put. No, there's nothing there. So that one, the option of rolling it forward for a credit isn't available. However, the option of selling the stock when it's put to us is, and selling another put. So let's have a look. We're talking about PRDO. So the calculation would be minus 15 plus the current price, which is 10.79, plus what we've already had for it, which is $3.30, $20.32, and we got $4.90 input income. So we're already in the black on that, and it's rising rapidly. So we'll just let it do its thing. $22.50. We're not ready to sell a call on it yet. It's not close enough to sell a call yet. There's another one there, Vivo, and Vivo is $22.50. There it is, $18.48. So yeah, so we're $4 behind on that one. Yeah, so there is 30 cents there. And we might get a bit more on the negotiation. So rather than take the cost of selling it and buying it again. That one, we could have it, we'll verify and see what the live prices are and probably just push it forward. So January, so October, we would get 460. There's 40 cents in there for it, which will just add to the money we've already had. Are you happy with that? Just roll it forward. It's still money in the bank come January. We can still then allow it to be put to us, sell it on and make the money then as well. So we can have at least 2 bites of making money off it.
Yeah.
So if we can push them forward, we do, because, as I said, just gives us 2 chances. So we're asking for 50 cents. That's probably won't give us it. They have. Okay. So we got the 50 cents for that. It's all right. So now we go to orders and find it in there. Vivo. Meridian Bioscience. Now what I'm looking for is the buy to open order, which is the old lid order. I want to cancel it. Okay, so I'll go back to here. We've already kicked one forward. That's why we've got 2 of them. So we've kicked one forward, which is at 31, which is $22.50. So this one, we want to put a new lid on. And Vivo, we've had a total of $5.10, so we're giving 50 cents. Okay, and there's still 2 more there. X, which is United States Steel. We sold the 27, and it's currently at 21. It's definitely been a correction over the last week or so. Yeah, so there is 45, 55, 65 cents on there. Well, I might as well have that. And then we'll verify it and see the actual prices. And they are this, there's 5 cents more on it. Yay, so that's all right. So that's just added another 70 cents to that trade. So we now go back to orders, find X, which marks the spot. Look for the buy to open order, kill it, and go back to the portfolio. And we're now looking at this one. And it's buy to open, 1 strike price down. I like it when there's only $1 interval. And we've had for that so far $6.25. So we'll give them 60 cents. Okay, and there's one more, which is Rank Xerox, $20 versus 27. We'll roll that one too. And there's only 10 cents in that one. So rather than go further off in the future, we'll do the allow it to be put to us, sell it, and sell another put on that one. So we start off with, I think it was 201,000 in cash. All we've done is some maintenance, and we're up to 209.5. And the account value hasn't been. There they are. Right. KHC, let's just check we haven't got it. Check KHC. We have, oh no, we've got KGC. KHC, oh, we've got that one already. RAMP is a new one. We won't have that one, RAMP. So let's have a quick look at the chart on RAMP. That's 3 years, it'll come down to 1. Okay, so it's at a nice low. That price is 48.23, and we're looking at expecting it to get up to 60. So that's where this blue line is here. However, there's a little gap there. So 55 is probably good. Can you see what I'm doing? So we're only expecting it to go from where it is now to there. Yes.
Jeff, I've only seen candles before, I think. So what's the red? Are you showing the difference between the red and the yellow lines?
Oh, they're just two moving averages.
Oh,
One is a 10-day moving average, that's the yellow one, and the other is a 20-day moving average. And what we're looking at with that is, you can see further back in the chart here how the candlesticks tend to stay on them, and or underneath them.
I see what you mean by
they've actually got to cross back over and stay over. Once they cross and stay over, they're likely to stay there.
Oh.
Similarly here, sort of it's had a little go, it's come back over, gets over it properly, and then stays under for quite a long time. So once it crosses, it generally stays there, and it has crossed here.
Right.
And
so it might only stay there for a couple of months or something.
Oh, well, here it's much shorter, but it will have a little run. Yeah. The whole market at the moment, if you look at the S&P 500, that's dancing around. We're waiting for it to get back over its moving average to confirm that its trend has changed.
Oh, okay.
So let's have a look at ramp. Go rampant on ramp. And it could even be one for December, that. It's because it just hasn't got very far to go. So if we were to sell a 55, I don't like it because we've got a $5 spread on it. No, I've gone right off that, because if we sold that, we get $6.50, which is fine. If the lid cut in, we would lose $5 because we'd be buying it at 55, selling it at 50. And we'd also have the cost of the lid on it as well. So I'm afraid that's one of Owen's recommendations, which I'm not going with.
Saying that, Jeff, are you saying that because it's too much of a difference?
Yeah.
Okay.
Quite often, if we look at stocks where we've got $5 strike price intervals, we're looking at $10, $15 over here, which is fine. I mean, if we were down here, $75, then $5 doesn't make a difference. Or it makes a difference, but it's still very well worth having. But here, not so good. Not so good. Okay, have we got SSRM? Let's have a look at that one. Yes, we have. I'm too good. I've already got them. That's a problem. He says, get this, and I've got it. TDS, we've got. Urban, we've got. Vale. Vale's another new one. We'll have a look at Vale. And that's it. So let's have a look at Vale. So back to the chart. And we're looking at, it's currently at 14. Expected to get up to, back up to these levels, which is 22. But there's a nice, if we go to follow the blue line along here, it's hit this level here once, twice, 3 times, nearly there 4, 5 times in the last year. So, up at sort of 18, 19 sort of level, even 20 level, it's worth thinking about. So let's see what options are available on Vale. We'll start with January and see what things look like. Right, so good thing straight away, $1 intervals. So that gives us plenty of choice. So, and some very nice premiums as well. So we could go for $3.55 on the 19, or for $5.85 on the 20. I don't think 20 is a problem at that price. I mean, that could be put to us at sort of $14. It's 85 or something, and we'd still be happy. Yeah.
Yes.
Everyone okay? Right.
Yes.
So how do we? So if we think about that veil, go back to the portfolio. We're talking about which, by the way, has gone up to 149 now. So we've got $149,295 net value in our account. 5% of that would be 7,464. Yeah. Divide that by the strike price we're looking at, which is 20, and that would give us 373 shares, which I would then say we will round up because it's a very good premium and a $1 strike price. Everyone okay with that?
Yes.
Sell to open. So I'm going to go for 4.
Yeah.
January 22, strike price 20, and it's a put. Let's see what comes up. 585 by 610. Ooh.
You want to change it to 4?
Oh, sorry, it was supposed to be 4. Well spotted. Thank you, Martine. Ooh, right. Well, we might as well have a little play and try and get 5. There's no chance. Let's see what the live prices are. We'll have to put it down 5 cents anyway, never mind. Okay, so we verify that. Let's have a little look at it. So this would bring us after the commission, $2,385. It's a very good trade, that. And it's less than 3,000 off the buying power. Let's see if we can get it.
Yes. No. Oh no, I thought it said yes.
No, we didn't expect to get it. Again, I'm putting a price in that I think is not likely to come off, so that I don't get caught having given it away too cheaply.
A cheeky.
Yeah, we don't. You need a cheeky first one to get started. It's like in an auction where someone that they start the bidding low. Right, so we're going at 495 now. They're saying 485. We're saying 495, please. And yes.
Yeah.
Happy with that. So that's good. So we go back to trading. Change it to buy to open. 1 strike price down makes me very happy. It's 19. And we give them 60 cents.
This is the lid, isn't it?
This is the lid.
Yeah.
So we're doing this for 2 reasons. One, if it clicks in, it gives us protection. It would mean that the shares could be put to us at 19, at 20, sorry, and we'd be able to sell them, or we would sell them automatically for 19 if the price was below 19. But that's great if it happens. But a much bigger reason is that it helps with the buying power.
Yes.
Okay. So we're only, it's a limit order. Oh, no, that's not a limit order. That's no good. Sorry, hang on. Don't want to get, yeah, 60 cents. That's right. Thought I was giving them $60 for a minute there. Trade. Okay, back to portfolio. Let's see how we're getting on. So we're up to sort of knocking on the door of 212,000 now. 148, so that's 50, 60, 74. So we've got about 74,000, which is half of the net liquid value as buying power. But our stock buying power is still 125,000 almost. So we're still buying power rich. But I haven't actually got any more trades that I want to suggest this evening. So we're about there. Okay, has everyone followed what we've been doing?
Pretty much.
Yes.
Yeah, it seems to work all right, doesn't it?
Mm.
I'm glad you know what you're doing, Jeff.
Yeah.
I'll tell you what. Well, you're saying a lot more now because I replaced my computer and I replaced my internet provider and I installed a mesh to get the internet circulating around the house better. So you can now I don't have to go away and do them all afterwards. So you can actually see what we're doing.
Yeah, it's great.
Yeah, so that's better, isn't it?
Well, it's good to see your internet working so quickly for a change.
Yeah, yeah. It actually worked more quickly last night, but I think that was because it was a little bit later at 7 o'clock. I think everyone's on at 6 o'clock to come in from work. Right. So just a couple of things to mention. Thank you for those that attended the live training in the Hilton at East Midlands Airport. We are putting it on again. It went very well. I would say a third of the people who attended have actually come along and thrown quite significantly more money in and recommended to friends and family as well. So it was very successful from our point of view too. If you did attend it, we're going to run it again in March, 4th and 5th of March, same venue. But the repeat fee is only £500. And we're going to change it. I've insisted that we put something different in. And that's going to be on the Friday afternoon when we're going to go absolutely into detail on where we find the stocks. So the actual process and how we identify which stocks to put on our list to start off with. So out of the 17,000, is it, or 1,700 that Value Line do, how do we get that down to a couple of dozen? So we'll be going through that.
Great.
And obviously, it's open to people who are coming for the first time as well. Saturday, we'll be going through all of this stuff, how we get out of trouble on calls and puts. We'll also be showing how we deal with calls, because in the same ways we've been rolling forward puts, you can actually do that with calls as well. So you can sell a call, and then if you don't like the outcome, you can buy it back and sell another one. There's so many things you can do, it's ridiculous. And we're also now filling up. I've just put my name down and paid my deposit today to go to the US. That's going to be a heck of a trip. 29th of April we go. We've got New York, where we're in the NASDAQ Stock Exchange for the opening and the ringing of the bell. We're going to see Value Line and to have some education with them. We'll also go and see the back office of Apex, where we deal. And then we've got Omaha with Warren Buffett. I hope he's still alive. And his mate, Charlie Munger, who's even older. He's about 95 now. So it's the annual general meeting of Warren Buffett. And you sort of think, oh, that'll be in some hotel or something. It's not. It's a stadium. And there are 40,000 people there. And it takes over the city of Omaha. It's a big party. Anyone who fancies it, there's a Warren Buffett fun run. I don't think he does it. And if he doesn't do it, I'm not doing it. And again, more education there. Then we move on to Chicago, to the Chicago Board of Options Exchange, where, again, we go on the trading floor, and we also meet up with a guy called John Naranja. He's on mainstream TV in the States every day, commentating on the stock market. And we know him quite well. I've actually been to his office previously. I know him from old. So 20 places, that's all we've got. And I think there's at least 10 already filled. So away we go. It's not cheap, but we're not making any money on it. There's education sort of thrown in throughout as well. It's actually, well, basically Owen's idea of £8,000, which is 7,995 or something. 3,000 deposit up front secures your place, and then the balance is due in March. So that's what we're doing. Right. Any final questions? Anyone got any comments, questions? Everybody got access to the training if they want to get to it, the online stuff?
Actually, Jeff, I know you sent me a message to say that you would get me on somehow, but I still don't really know how to. Do I need a login?
Yes. It should have been fairly automatic when you set it up, but I can send you your login details. So if you log in once, it'll remember you after that. So you have to log in once.
Okay.
When you get in, you're looking for the tab, which I can't remember. It's got modules, I think.
Module. Because I went, yeah, because I went on to module and then it just comes up with a page of writing. It
So
doesn't.
you're not allowed. Get off. Yeah.
Like that. Asking
No, you need to be upgraded by me, which you're all entitled to have, no problem. But so that not just anyone can get on there and go on the training. You just need to drop me a WhatsApp message and I'll upgrade you and you get on. And if you haven't got or can't get your password and username, I can send them to you or send you a link to send new ones if you should.
Okay, because I can't find a place to actually log in on the site. Is there a login box?
Yeah, let's go and have a little look while we're here. When I log in, I get into the sort of back office. Here we are. Right, so if I go back to here and share, there it is. Okay, so this is the Smart Investments website. This is where I'm already in. So you would go here to log in or get instant access. So you're looking for that green band. And if you click on there, you'll be asked for your name and email address. And then you register. I'm already registered, so it won't let me do it. Then once you're in, you go up to here for the modules. So it's a funny menu. So the drop-down bit's got module 2, 3, 4, and 5, but it's actually the top bit, module 1, that
Yeah.
you go to, and that'll take you there. So, and then it should look like that. You get into the videos.
Okay, because when I register, I put my name and email in, and then not anything happens. Or maybe
No, it
it's-
won't immediately. It's waiting for me to press some buttons at this end,
Okay.
which I thought I'd done yesterday, but
Okay.
I'll sort you out in the morning anyway, no problem.
Okay, you might want to.
What I'll do, I'll do it, and I'll log in as you and make sure it works.
Okay. You might have done. I'll just quickly look.
Well, I'm quick sometimes.
Yeah. Yeah. Okay. Thank you.
All right. Well, yeah, just if it's not working, drop me a note on WhatsApp and I'll sort out in the morning.
Okay. Thank you.
Right. Anybody else? Any more for any more? Right. In that case, thank you for coming along. And well, it's an early night, isn't it? Okay. Thank you.
Jeff.
Thanks.
Thanks a lot.
Jeff.
Bye-bye.
Bye.
Jeff. Bye, everyone.